Discussion about manifestations of the globalization of world capital markets.
Overview of capital market and globalization of world capital market. As we all know, economic include many different markets such as labor market, money market, commodity market, capital market. Today, the trend of economic, political, and social cultural linkage and exchange among countries around the world is increasing, especially its economic field, weaken its globalization. The world's capital market is also a part of globalization trends. Definitions and function of capital market. The capital market is a part of the financial market that has the functions of providing long-term investment capital over years through the economy through an institutional arrangement to borrow with different terms and conditions. Subject of capital market include financial institution, business units, and corporations. The capital market provides long-term debt and financial equity to government and business through financial instruments such as stock, commercial, and consumer loans, government security, and government agency security. The capital market has the following functions: saving mobilization, creating a new capital, providing an investment channel, contribute to economic growth. And the definition of the world's capital market globalization. Definition of world capital market globalizations. Globalization of the world capital market is the process of capital markets separate countries that have been and will gradually integrate together to form a global capital market. In the global capital market, capital flows can freely move across borders, and the capital market of countries will influence each other in the world capital market.
I will discuss about the manifestation of the globalization of the world capital markets. First, the globalization of world capital market has to increase capital flow between countries. Thanks to the globalization of world capital market, companies and investors can invest in other countries and capital flow freely across borders. Regarding investing in other countries, companies and investors can invest in the form of direct investment, indirect investment, or merger. An example of FDI is that in 2017, US-based Apple announced a $507.1 million investment to boost research and development work in China. Example of M&A activity is Taiso bought stock of Hong Facma, which made Hong Facma become a subsidiary of Taiso. Second manifestation is the integration of financial markets around the world. With the increasing integration of stock market around the world, the advance of technology, and the easy communication and information dissemination, investors from different countries can easily buy and sell stock in other countries, leading to great investment opportunity. Besides, the financial market of countries in the region and the world have become increasingly connected. Investors have more access to investment opportunities, and companies are easier to raise capital. Example, the globalization of world capital market has brought opportunity for Vietnamese enterprise to invest in other countries in the world. A prominent example is Viettel. Up to this point, Viettel had been implemented investment and business activity in 4 countries in Africa: Mozambique, Tanzania, Burundi, and Cameroon. At the beginning of 2023, Viettel foreign investment revenue reached $1 billion.
Globalization of world capital markets has increased competition among businesses, such as companies from different countries can now easily compete with each other. Besides, it also increased the competition between countries in the process of attracting foreign investment. For example, the competition between domestic and foreign enterprises in the retail market in Vietnam. Central Retail is a Thai retailer that is well known for its previous acquisition of more than 1 billion in acquisitions of Big C supermarket chain in Vietnam. Not only Central Retail, Aeon Vietnam belongs to Aeon Group Japan, also affirmed to continue to expand its network in Vietnam. This leads to fierce competition between domestic and foreign retailers. Next example is that countries are increasingly competing to attract foreign investment. A typical example is that Vietnam is competing with countries in regions such as Indonesia, Malaysia in attracting FDI. The next manifestation is increased exchange rate volatility. The value of currency can fluctuate rapidly in response to change in global economic conditions. Specifically, investors will tend to invest in high-yield currencies, as shown by quite commonly borrowing low-yield currencies and converting them into high-yielding currency. Then invest the highest interest currency in many forms to make a profit, thanks to the difference in interest rate of two currencies. This will create a change in the supply and demand of foreign currency in the market and thereby affect the exchange rate.
Next manifestation is risk sharing. Globalization of capital markets allows investors to reduce risk in their investment process. For example, when investing abroad, if investors only invest in one country, there may be a risk if such country has an economic or political crisis. Thanks to the globalization of world capital markets, they can divide their capital equally and invest in many different countries. This will help reduce risk for investors, and they will still receive profits if one of the countries they invest in has economic problems. And the last one is financial crisis. The globalization of capital markets has also caused financial crises around the world. For example, the financial crisis of 2008 is a global economic crisis that began in the United States in 2007 and quickly spread to other countries around the world. The interconnectedness of global financial markets means that the crisis spreads rapidly across borders, leading to a global recession and thus lasted for several years. In conclusion, globalization of world capital markets is a complex process that transcends the border of a single country. It has many manifestations and has both positive and negative effects on the economy of the country. It's helping to link country economy and capital markets, helping business access capital more easily, providing more opportunity for investors, and investing in foreign companies is easier. However, besides the advantage that globalization of the world capital market brings, it also causes many negative effects, such as economic risk, fair competition between countries, and it makes the economy of the country dependent on the economy or investment from another country. Therefore, in the trend of integration and globalization of the world capital markets, country, business, and investors not only to see the opportunities that it brings, but also have to adopt appropriate policy, the right strategy to prevent negative influence, as well as to be able to compete with competition in the international markets.